Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 31st of March 2019 and we're providing our gold and silver weekly update for the weekend in the 29th of March. Gold fell $21 last week from $1,313 to $1,292, having hit a high of $1,323 and a low of $1,287. In sterling terms, gold finished the week at £991, that's down £3. And in euros, it closed at €1,151, that's down €10. Silver fell 27 cents, from $15.42 to $15.15, having hit a high of $15.57 and a low of $14.99. In sterling terms, it closed at £11.62, that's down 5 pence. And in euros, it closed at 13.50 euros, that's down 0.14 euros. The gold to silver ratio rose from 85.1 to 1 to 85.3 to 1. The Dow Jones closed on Friday at 25,928. Up 211 points on the day and up 426 points on the week. And the NASDAQ closed at 7,729, up 60 points on the day and up 87 points on the week. And the S&P 500 closed at 2,834, up 18 points on the day and up 34 points on the week. Brent crude rose 55 cents from $67.03 to $67.58. And US light crude rose $1.10 from $59.04 to $60.14. The dollar index stands at 97.28, that's up 0.73 on the week. Our conclusion in last week's report stated, quote, "We do not see anything particularly exciting on the economic front for gold and silver prices next week, save that they will continue to move more or less range-bound, as mentioned in previous weeks," unquote. Well, the gold price opened a few dollars stronger last week, maintained its level until Wednesday, and then started its decline, closing just $5 above its weekly low. The fall below 1,300 is psychologically significant, but from a technical point of view, the floor of 1287 is of particular note, as if this is breached, then the downtrend is confirmed. Equally, on the upside, if 1330 is breached. There is little doubt that the dollar strength has impacted gold prices, together with an appetite for slightly riskier investments, including stocks. Though, as we have said for the past few weeks, we're operating within a relatively tight band. We have been the object of quite some criticism by certain pumper trolls and guru acolytes who said we were wrong about the dollar when we stated we expected the index to rise above 95 where it stood a few weeks ago and to expect figures above 97, heading very shortly towards 98, as they were forecasting a fall to and below 90. Well, as we stated last week, the US dollar is the best of a bad bunch, and we really do not foresee any dramatic fall in its relative value against other currencies for some time yet. The trade deficit figures came in on Wednesday and showed a deficit of $51 billion in January compared with expectations of $57 billion, and core inflation came in at 0.1% for January compared with expectations of 0.2%, thereby buoying markets somewhat. On the silver front, once again, a similar pattern to gold last week. The $15 floor basically held with just a brief infringement, and this is important. Our analysis for some time stated that we saw a broad trading range between $15 and $16 and a tight range between $15 and $15.50. Now, of course, if dollar strength continues, the $15 level will be breached, and we do expect this to happen in the not-too-distant future, as we simply cannot see where the demand for more silver is going to come from in a world economy that is turning down. Its only hope near term is that people utilize it as a monetary metal. But let's be really blunt here. If markets are not expecting any further rises in interest rates, and in fact may predict the next move being down, we can expect stock markets to rise further, partially at the expense of gold and silver. And this, of course, then is outweighed by the slight dollar weakness this may cause, thereby increasing their price. And you therefore have this contradictory force operating on a continual level, with one gaining over the other. So what do we have on the economic calendar for next week? Well, on Monday we have retail sales for February, plus market manufacturing PMI and ISM manufacturing index for March. Tuesday, durable good orders for Feb and motor vehicle sales for March. Wednesday, market services PMI and ISM non-manufacturing index for March. And Friday, non-farm payrolls for March, including average hourly earnings and the unemployment rate. An interesting week for data, and especially Friday. And we shall see whether February job figures, which were surprisingly low, will be re-rated, and whether there is some improvement this month. So how do we see the coming week? Well, one thing is for certain. We shall not see silver at $100 and gold at $5,000, as our friend David Morgan predicted on Palisade Radio back in September 2017, giving his predictions for 2018 or 2019. If anything, we see a slight bias downwards, but the figures this week are quite meaningful and will have an impact. Of course, all of the debate around Basel III has not seen the sudden upsurge in gold prices many predicted, and we shall see if that follows through from the 1st of April. As always, our view is that long-term gold and silver are excellent purchases, and one should maintain a certain level of between 10 to 20%, depending on your aggressive or passive investment tolerance in your portfolio, which means that when prices dip and you are below these figures, it presents a great opportunity. If you are above these figures, well, of course, the decision is yours, but we still believe that more favorable prices are ahead in US dollar terms. Meanwhile, as always, we hope you have a most prosperous week ahead. And for Inner Sanctum Bronze and Silver members, we are uploading new ebooks and courses later today, and hopefully this evening or latest tomorrow morning, a video in the Inner Sanctum as a result of our bankers meeting in Rome. Watch out for that one. Because of our Rome visit, we did not manage to upload all of the Inner Sanctum videos we had planned to, but by Tuesday we'll have caught up completely. For those interested in Brexit, we have some crucial weeks ahead, so do stay tuned to Dr. Richard North's blog. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.